Welcome back, ladies and gentlemen. Let's talk about GameStop GME stock. It has finally found a bottom. I've been keeping an eye on this one for a long time, and finally, we found our floor at $10.50. That is where I will be looking to buy the next time it comes down. It's inside a trading range. Finally, we have a bottom here on this chart. This used to have a bottom back here, way back here. You'll notice when I zoom in, we bottomed out at $15, $16 back here. It touched that area so many times. Anytime it would come down here, it would bounce as high as $26, 27 here, and 24 here. Here it got a little bounce to 19 from a low of 16, and eventually it broke down. But when it does find that new bottom, guess what, guys? History likes to repeat itself. We have found a new area where buyers love this stock nice and cheap at that big round number that people love, 1010.00. This is how I like to trade personally. I like to buy bottoms. I exercise patience so that I may buy as cheap as possible because I am a cheapskate. And then I load up down here and wait for the next move back to the top of this range. So with this strategy that I use personally, I exercise a lot of patience. I will wait months. If it takes months, which it more likely will take months for this to come down, I will wait. It'll come down nice and cheap, and I'll reload a position at $10, and then we will swing it to the upside. But exercise patience. Again, history tends to repeat itself. Let me show you an example right now. I'm going to pull up a penny stock, and I used the exact same strategy for this penny stock. I used the same strategy. I looked at the penny stock and I thought, it looks like it's bottomed out down here at 002. Guess what I did? I bought down here, and it had history. It had history of bouncing off of this level. Both times it ran 100%. Guess what? I made 100% gains here. But then it did something different. It actually pulled back and then ran to 009. So unfortunately, I missed out on making a potential 400% plus. But hey, my target is always double or I take the loss. So that is the strategy, guys. This is what I like to do on this channel. So don't forget to like and subscribe if you want to buy bottoms. And if you like exercising patience, this channel is not for you if you do not have the patience. Tilray, another stock where it bottoms out down here under 180, and then it has a run up, does it again and again. And guess what? It's going to do it again. Until it breaks that bottom, we continue to buy the bottom. When it does break it, we'll take the loss and we'll move on. Because guess what? I have a friend here who made over 50% gains on this pop, on this reclassification headline that came out. And it's coming down, and we'll load up and we'll do it again. But with some stocks, you have to be patient with them. It takes forever for them to find a bottom. This one, because it did break down here, we had to wait and see where it was going to bottom out, and it did bottom out at 10. I figured people love big round numbers, so I mean, it ran from 10 to 20. That's a 100%er. We'll wait to buy down here. Do not buy up here. Buying up here is the equivalent of buying the top. Buying anywhere in the middle of this is, I mean, you're just buying in the no zone. I call it the no buy zone, the death zone. There's no reason to be buying anywhere here because you just don't know where it's going to go. And here's a perfect example. The stock was just kind of going back and forth, back and forth. Eventually, it came down lower. Anyone who bought here and held, I mean, they just had to hope that it would bounce and find a support somewhere. And it did, thankfully for them. It could have easily just kept going down, which it has done so before. So you got to look at the history of the stock and see how it likes to move. I think we bottomed out here at this big, nice number. And if we look at the financials, unfortunately, the financials don't look that great. Let's pull up the whiteboard. Where's my free online whiteboard? Okay, I'm pulling out the whiteboard because if we look at the history of the total revenue and cost of goods sold, the total revenue has been pretty stagnant. It's been pretty stagnant since 2019, 6.47 billion, and then it went down to 5 billion, then 6 billion, a rise by 1 billion in 2021. Then it kind of it's been going sideways here. Now it's at 5.27 billion as of 2023. 2024, we would expect probably no different. Let's switch to the quarterly and see how the quarterlies are looking. The quarterlies are looking, they're not looking too great. So this stock, if we were to plot out a chart for the total revenue, it's the total revenue has been doing this. It's just been going sideways. That's the total revenue right there. That's what it's been doing. It's just going sideways. The cost of goods sold, same thing. It's been staying in the 4 billion range. So the cost of goods sold has been doing the exact same thing. It's just going sideways. And what is the operating expenses? That's something we have to look at here. Operating expenses, one, wouch, that hurts. Negative 1.27, negative 162. So the operating expenses have been hovering around the negative 1.5 range. So you'll notice I'm drawing a lot of sideways waves here because the cost of goods sold, the total revenue, and the operating expenses since 2019, we've just been going sideways. The stock itself has been going lower, but it has found a bottom, in my opinion, at $10. We're going to buy at 10. And as long as the company continues to go sideways on the financials, I think we'll be sitting pretty and loading up at 10 and swinging it to the upside. And that is it for the video. I do like to look at the financials just to see how the company is doing. You know, it can't be a trash company. If it's a trash company, the numbers will reveal that. They have more assets than liabilities, according at least to TradingView. Maybe I'm wrong. I don't think they're positive. Do they have positive cash flow? No, negative cash flow as of 2023 at least. So, just for comparison, Nightscope. Let me show you. It's a Nasdaq company. Just as a comparison, look at the cost of goods sold. Okay, look at the total revenue. 3 million in total revenue, cost of goods sold, negative 4.74 million. What does that mean, guys? It means you're running a hot dog stand selling hot dogs for $1, but it costs you $1.50 to make that hot dog. So you're losing 50 cents a dog sold. You cannot be ever profitable running a company like that. So this is bad, a great example of a really bad company, but just on the numbers at least. So I think GME looking good on the financials. It's better than the company trending to the downside and slowly its revenue is just deteriorating and its expenses going up and it's so GME not a complete sham of a stock, but you know it's going sideways. Its chart is going sideways. Let's buy the bottom. That is my opinion. I like bottoms. If you like bottoms too, don't forget to like and subscribe. I will see you.